Welcome to the daily brief, where I'll briefly go over just the high points of Monday's session, and then we'll look at the scenarios and see how things look for Tuesday, August 16th. And it was another up day. It was a positive day. We saw some technical improvements. We're also starting to see a little bit more of an overbought situation develop. So let's go back and talk about what happened. At the open, we did have a gap lower right down to the daily pivot at 42.60. Prices then rebounded between the daily pivot and the unchanged level. Then as the day went on, we finally got above the unchanged level and went positive up to R1, which was at 4,300, which is kind of a psychological level because the financial media loves to talk about that. We ended up closing just off the high in Monday's session. So overall, wasn't a real big advancing day, but we saw some more improvement on Monday than actually we saw last Friday with some of the scenarios that we're looking at. We were up 0.4%. Volume was below average, which is kind of the norm these days. The technicals are still positive, but starting to get more overbought. Inflation and interest rates are the real concern right now. And then we have this debate going back and forth about what is a recession and are we in one? So what are some comments? The sector rotation and our positive setups, they advanced and they're still positive overall. We're still below the 200-day simple moving average. And if we continue to go up from here, we're going to become more and more overbought at just about the point when we hit that 200-day simple moving average. And that could mean that the average itself ends up being even stronger resistance. Or can we break through that 200-day simple moving average? That would be quite positive, even if we are in an overbought situation at that point. Now, this may not happen right away. It may take some time. If this is what ends up happening, we might go sideways or a little bit down and then try to give a run at the 200-day at that point, and then we'll have to evaluate things to see, are they vulnerable to being overbought at that situation? The 10 to the 2 and the 10 to the 5, they're still inverted. Fear, it's at 55, so it's just slightly into positive territory, but still neutral. One thing that was interesting is both the dollar and stocks were up in Monday. We've been seeing them go pretty much in the opposite direction. Oil has now dropped below 90. The economic reports that came out, we had the Empire State Manufacturing. This is New York, and this was way, way weaker than expected. It came out at minus 31.3. They expected it to be up 5. We also saw a real decrease in the housing market index. They expected it to come in at 55. It came in at 49. So our trend, it's still positive. We had an up day on Friday, an up day on Monday. So that's looking pretty good. And our momentum continues to be positive. So what's our outlook then for Tuesday? The technicals are positive. They're becoming more overbought. And we still have the 200-day moving average above where we're at. Sentiment is still fairly neutral. We have housing starts and building permits coming out, as well as industrial production and capacity utilization. And then the whole list of different events, with the big one being inflation and interest rates. But as I always say, all of these other things on this list could come to the forefront at any time and become the real focus. And that could be positive or it could be negative. So our scenarios, we're not really in a down scenario right now, even though we have a lot of headwinds against prices going higher. And we also have the S&P becoming more overbought with the resistance ahead or above where we're at. But nothing is really pointing down at this point because our technicals are positive. So we're now going with the up scenario because the technicals are looking a lot better. But as I've been saying, they're starting to become a little bit more overbought, short term and even possibly into the intermediate term. You still have a lot of folks that don't believe this. They don't really think the market's going to go up. They think this is a dead cat bounce. And if we do go up, we're going to hit that 200-day moving average, turn around, and then start going in the toilet after that. And that might be what happens. But we're seeing a lot of things under the surface that are showing some potential strength. And then if we do go above that 200-day moving average, you have FOMO, the fear of missing out. That's when a lot of investors will make their decisions, because once we go above that, that's considered positive, and you might have a lot of people piling in. That could be positive because you have a lot of buyers entering and you have a lot of money on the sidelines that it's not being deployed right now. But at the same time, you have folks that do this that don't really follow this all that close. And a lot of times they get in at just the wrong time. It might go up a little bit after they enter their positions and they feel good about it, only to see things turn around and go back down. Our scenarios are still looking okay. The sector rotation, our setups, they're still showing things as positive. Our technicals are still positive. We still are we're above the moving averages, except for the 200-day simple moving average. We're not in a sideways trend right now with the ADX acting pretty strong. So our conclusion is the S&P is positive, but becoming short-term and even intermediate term overbought. Short term, it's positive, overbought. Intermediate term, becoming more overbought. Long term, as long as we're below that 200-day moving average, we continue to be negative. So thank you. If you want to see a more in-depth discussion and look at the actual charts that I use to make these conclusions, please look at the daily video, and I will look at preparing the next briefing video after Tuesday's session.